afternoon this Thursday, October 26th. Well, grain prices seen a burn higher this morning, of wheat jumping 15 cents off of overnight lows into a high, along with corn and soybeans lifting as word came out of Ukraine that they were possibly shutting down their new little grain corridor that would come along into the Black Sea and transverse the NATO countries up until they got to their points near Odessa. Their conversation was that there was Russian military flights that were going overhead. They were worrying about mining taking place in the seas. While that did create the rally, but like I put in the morning commentary this morning, it seemed kind of odd that in the past when something like this would occur, wheat would jump 40 cents in a matter of an hour. And why was this such a timid jump? Well, it turns out we've got the answer. Ukraine this morning quickly by 10:45 a.m. And this obviously it was the network news prior to that. The Black Sea grain corridor is working. They said it was not true, and they denied the reports that it had been occurring. So there's the answer to that. But here's something interesting, though, still that can help build for wheat, and that is the Russian outstanding wheat sales has hit a 4-month low. The reality is they've been selling 4 million metric tons a month, but now they've got about 1.6 million metric tons of sales that are only happening to make it out, and we're coming up on winter. This is going to get worse because I had said over a month ago, once we hit the winter months of late November into December, they're going to be lucky if they can move about 2 million metric tons a month. And so this could start to become a story as we get a week or two down the road, or whenever the big shorts in the wheat market are willing to let go of the market and stop playing the carry. So now we're going to go down to South America. And we're going to have a conversation about this drought that's building down there. And so people understand that while they hear it's raining in some areas of Brazil, but not in others. Well, these states can be deceiving of what's going on here, but Mato Grosso is what we want to focus on. Mato Grosso produces 25% of all the beans grown in Brazil. And actually, it's grown to about 27% because this is as the latest one that the USDA has out through 2020. It's grown now a little bit more. But what I want you to note of Mato Grosso, and of course Goiás, the state to its east, they produce a lot of beans. And now if we focus on Mato Grosso, let's give you a little education on topography. If you were to lay Mato Grosso over the state of Texas, it'd be 1.5 times the state of Texas. Or another way to describe it, Mato Grosso, if you were to take the square miles converted from them to the U.S., it would encompass Minnesota, Nebraska, Iowa, Illinois, Indiana, and Ohio would make up Mato Grosso. This is the same countryside as this here. That's how big Mato Grosso is. And now Mato Grosso has been caught in this major drought. And keep in mind, the soil in Brazil, especially Mato Grosso, is nothing like Iowa and Illinois. They need rains regularly. And they are in a very heavy drought time period that's been in place. So much so that this data that come out here, heat damage days, October 16th through the 22nd, the red indicates 7 days. The yellow is 4 days. This is how many days above 100-degree temperature. This is Mato Grosso right here. It spent all 7 days pretty much above 100 degrees. This is anything above 95 degrees. And so obviously all of Mato Grosso and to the east where states were suffering under this drought. Now, taking this further, here is a forecast reaching out just 7 days. And here I had said last week, look at all the rain they have in the 10-day forecast for Mato Grosso. I'll bet you when we get into the 7-day, it all disappears. Well, look at this is just light showers. This morning we had 30% coverage over the last 2 days in Mato Grosso of 10 hundredths to an inch of rain. 30% coverage, a dud. And so now here, all this rain last week that was forecasted for this window starting through here, it's dudding out again. Oh, and guess what the new forecast does? The 10-day going out to November 6th, oh yeah, there's chances of rain. Now, granted, this isn't big rain, but to the east, they might be catching some rain. But my focus here is on Mato Grosso, because keep in mind, they're anticipating 162 million metric tons of beans out of Brazil this year. All right, well, 25% of that is going to be 40.5 million metric tons of beans out of Mato Grosso. What if Mato Grosso gets hit with a drought that Argentina experienced last year when they slashed production almost by half? There goes 20 million metric tons of beans. Now we're down to 142 million metric tons. And it would not just be Mato Grosso, it would be probably some other areas as well that are getting caught in it. This could be the next coming story that drives bean prices up after we get past the first of the month. Now, this is courtesy of StoneX out of Brazil. This is a monthly accumulated rainfall. And the reason why the market's not getting excited yet is because we're coming out of August. And our rain in August was kind of okay. We don't expect much in here anyway. But September was a shortfall of last year. October was less than half of last year. And now, as we roll into November, we're looking halfway into the month of November. We're not seeing much rain at all in Mato Grosso. That means we can probably already start cut this thing in half. Even your 5-year average implies we should be flying up to what happened last year. And what happens when we get into December? Well, everybody's banking on the rain in December, which comes to about 10 inches of rainfall if you do the math here in millimeters. And the 5-year average would be less than that. But we're walking into a period where we're watching a drought in Mato Grosso manifesting. And the shortfall in rain has the ability to create a real true drought rally here on these beans into the end of the year. So as we carry this into the January beans, as you know, we've had that labeled as wave 1 last week when the high was hit. That was your 200-day moving average and also our 39-day moving average on this bean chart, as you can see, which is just shy of a 40-day. Quite reliable. And we're working a wave 2 pullback into the first of the month. The blue arrow denotes first of the month. When you usually get some kind of turns here in the marketplace. You can see here all these turns that occur. And so we think we're going to see tomorrow's option expiration for November beans, so they have to screw the people who own calls. They got to beat them up. And then first notice day in the next Tuesday, or probably Wednesday, the first of the month, get some kind of low in here. Of course, we had said in yesterday's newsletter and Tuesday's video, likely going to take the format of an A, B, C pullback. And a C wave we still think can get us back down to the 1285, 1290 range before we start our wave 3. And that is how our plan is on the daily bean chart here, wave 1, wave 2, and a wave 3 kick up. Now, granted, I know what the other guys out there are talking about. This is wave done, this is wave 1 down, this is wave 2, and here's wave 3 and a 2 of 3, and we're going to collapse again in a 3 of 3. Yeah, I get that, but these guys don't follow the world developing news, and they don't understand the upcoming WASDE crop report on November 9th, which likely will show a lower bean yield again, but the USDA is not going to be able to manipulate that carryout anymore because they've got to increase crush, and they've already slashed bean exports so much, can they even slash it anymore? Maybe they will and then adjust it later, but I think we're developing a carryout that's going to start falling below 220 million domestically, and a concern on this Brazilian crop that gets us moving higher in a wave 3 format. That's my take on it. Corn. We did change the count on this. This was a B, not a 3. We're doing a Alt A, B, C break in a wave 2. We think we'll find a support here above prior support levels here in the low 570 range, and then start some form of a 5-wave advance. This is not to scale and not to time, okay? I'm just trying to show you how it plays out. We think we got a winter rally coming into January, with the concern that the safrinha corn crop is going to get planted late as well because of the late bean crop. And what if that drought manifests? Then there's going to be concern that the big corn potential out of Brazil is going to fall off as reproduction will occur in their hot, dry season. Wheat, well, it's Chicago that has the spike low. They're still burying Kansas City wheat as they're eliminating the spread of the premium that Kansas carries over Chicago. They're still leaving some of that Minneapolis in there due to the drought that occurred up in Canada and occurring also in areas of Russia. But for that most part, we've got an ABC bounce, so we could still see a break in here, which would line up with our 6-day cycle next week. The last one was a bust. Maybe this one turns into something as we do an ABC rally, final low in the next week, and then start some kind of C wave bounce into the winter months, as Russia will not be able to make commitments possibly. And the world will find out they got to buy from somewhere else when they cannot move the grain to port side from their country. In Russia, a lot of areas, they don't have like the U.S. has for moving grain during the wintertime as easy as we can. Gold, look at these corrections. We had our last turn period, came in low early, and even while the dollar's rallying, gold's lifting, punches through moving average support. 2-day correction is shallow, punches again. 2-day correction is shallow. This is why we picked up some gold and some silver, and we're looking for a push to continue higher into the 10th of November. So there's something going on here, and they're certainly buying, and maybe it has something to do with concerns of the notes on November 1st from the Federal Reserve and their willingness maybe not to raise interest rates because they're concerned about the housing market and the economy maybe will be tipping slower, quicker. GDP out today was affected more by the Taylor Swift concerts and some other information rather than the basic economy, which this coming month will show the GDP slowing. Crude oil, we are looking for the 5th wave advance. We suspected 94 would be a problem. worked out an A-wave decline. We had seen the low hat back on this break, bought a little bit of crude oil, made some money on the bounce. B-wave rally did stop at our projected resistance point and right on our turn date on a Friday. And now we're banging onto a moving average support, which Fridays are typically up days ahead of the weekend with the war potential, but we'll see. Maybe not this time. But we do think we're going to see if there is a bounce, it'll get sold. We think we're working a C-wave decline into the 20th of November, which is seasonal for correction, and that could go even longer. But we are suspecting crude oil without your Middle Eastern input of oil production being embargoed and or reduced because of war. That would change everything here. But until that does, we have to trade in a vacuum, so to speak, and anticipate further weakness with the stock market to come. Here's the intraday chart and why it's so important. Oil needs to be up tomorrow, because if it's not, then we do break down and we finish off that C-wave sooner than later. This is Eugene Grainer with Heartland Investor Capital Management. I hope you find this information useful.